Well, let's talk about Jyothy Laboratories. Up and about in trade today. Q1 earnings came in. The PAT came in at 40 crore rupees, down about 19.6%. But revenue grew at a healthy 21%. Margins came in higher, 21.5% as well. We're joined by the management. Ullas Kamath, who's the joint managing director of Jyothy Laboratories, is joining us now. Thank you so much, Mr. Kamath, for taking the time. I want to start by asking about the current demand trends. What do you see post the second wave of the COVID-19 pandemic? Is there now a focus on smaller SKUs?
The quarter which has gone by, the June quarter, has been very good for us. It's 21.7% sales growth. We clocked 525 crore of sales during the quarter ended June 30th. And it is an all-round growth. Our fabric care, which is 35% of our business, has grown by 27.5%. Our dishwash, which is at 36% of our business, has grown by 22%. And household insecticides is about 15% of our business, has grown by 12.7%. And personal care, which is predominantly Margo, which is 13% of our business, has grown by 13.5%. So overall, the quarter has done very well. Despite the COVID-2 wave was disrupting our business from pocket to pocket here and there, but overall we are in line with our budgeted thinking, and we are happy the way how we have delivered the numbers. However, the cost of goods, input cost has drastically gone up. It's for the entire industry. We have been seeing it for the last 2-3 quarters now. And for overall, for us, we had to sacrifice about 3% of our gross margin. And at the same time, we have increased our advertisement budget almost to double. With that, the EBITDA has come at 12% as usual against 17%. But I think we'll be able to make it up in the quarters to come.
Mr. Kamath, I do want to talk a little bit more about what you were just mentioning, the cost of raw materials. We've seen the inflationary trend across the industry. What is the outlook, according to you, going forward on the raw material side and, of course, on margins? You spoke a little bit about it, but are the levels sustainable?
In fact, the raw material pressure has been there for the last almost a year now. And we thought that it will come down, but it has not so far. But a little bit of softening has happened, a little bit in the last probably week or two. But what we have done is, for us, overall, the impact on the raw material when compared to the sales, it is about 10% of our sales. The raw material price has gone up, out of which we were able to take about 5%. We will be able to realize more by increasing the retail price in the select SKUs and at the same time reducing our trade promotion. And another 2% we got in operational efficiency, because when you are growing at 20%, then naturally you get some scale advantage. And we were able to get some operational efficiency, that was about 2%. And we took 3%, we took the hit on the gross margin. And answering your question, I think over a bit of time it will normalize. If it is not, then we are left with no option than taking one more price hike in the second half of this year.
But you've already taken price hikes, Mr. Kamath. The question is, it being a fine balance, is it possible that you will be able to take more price hikes without affecting consumer demand?
In fact, if we take another 3% hike, we are back to our normal margin structure. We'll be back there, just 3%. Out of that, we have already taken over a percentage increase. We already taken in the month of July itself. So consumption for a consumer, 1%, 2%, it does not matter. Like if you're having 100 rupee product, or if it goes to 101, 102, they will not even know about it. Having said that, we will take that calibrated approach, and only select SKUs we will take, not on all the SKUs and not on all the brands. For example, if you are on the smaller SKUs, in our company, 30% of our products are smaller SKUs, like 5 rupee, 10 rupee, 20 rupees. You can't make from 5 to 6 or 10 to 11. You can't make it. There we adjust a little bit in the grammages, but otherwise, most of the time we take the price hike in the bigger SKUs, like 100 rupees, 200 rupees. There we take the price hike. Wherein overall, if we take about 3% price hike, our margin will be back to pre-COVID levels.
Right. Also wanted to understand, the fabric care segment, which saw very strong performance in the quarter gone by. Do you see it further improving, or will it be at these levels and consolidate here for the next few quarters as well?
27.5% growth in the quarter is definitely because malls have opened and CSD canteens are operating fine. So e-commerce is doing extremely well. And definitely we'll be able to see good double-digit growth in the coming quarters also. But this 27.5% is actually on a higher base because the last year, same time, we did well with fabric care also. To that extent, 27.5% growth every quarter may not be sustainable, but very good high double-digit growth can be seen in the coming quarters. And as of now, as we speak, the momentum is still very robust.
The HI segment has sustained a double-digit growth despite a 2.5% or rather 2.5 times growth in the base quarter. Is this growth mainly because of seasonality, or would you say that this is the new normal for this particular segment?
Yeah, it's a combination of both. One is that people don't want to fall sick, and mosquitoes, breeding will lead to malaria, dengue, chikungunya. So people don't want to fall sick. There is a lot of preventive measures they are taking. So to that extent, it is something which we are seeing new normal. And also the season has been very good last year also. In the current year also, season is not that bad. So we are able to get the momentum both from seasonality point of view and also from the point of view of people, using more coils or liquids. The last one is, again, some competitor, inaction will also help you to get higher sales.
Mr. Kamath, the difference between the first wave and the second wave of the COVID-19 pandemic is that the second wave affected the rural segment much, much more. What are the trends that you're picking up as far as rural demand is concerned?
We are seeing actually a very good demand from the rural, much better than the urban demand. And this demand we are seeing right from the government investment in the rural sector right from April 2020 post a lockdown, and that momentum is continuing. As of now, rural is doing shade better than the urban growth. While growth is there in both the segments, but rural is doing well for us. And also we are as I said, that 30% of our products are going in the smaller SKUs, which is now going towards 35% of our business going towards smaller SKUs. This is primarily because the demand coming from rural India. With that, we are extremely happy. The new people are using our products. Our market share is improving in all the brands. Our market share has improved in the quarter. And this, according to me, should continue in the coming quarters as well, because the government is committed to improve the income of rural and doubling the income of the farmers. If that happens, then consumption should be much more than what we are seeing presently.
Mr. Kamath, you just said that the market share has improved across brands. Could you quantify that for us?
Ujala is all-time high at 82.6%, and EXO has gained 1 percentage market share to 12.5%, and Prill is at 17.4%. It's again about 150 BPS we have increased to 17.4%. Maxo, we are now strong number 2 in coils at 22.9% market share, and liquid at 8.9% market share. So to that extent, all the brands have gained the market share in the last quarters, and that's heartening to note. In added to that, the top line growth also has helped us to believe the consumption story in India more meaningfully.